Hi, welcome back to Stock Talk. This is Joe Rabil with Rabil Stock Research. So I appreciate all the support this year. This will be the last show of 2023, and we'll get things going early in 2024, hopefully with a lot of requests that have come through. Please keep sending them in, and we'll gather them and get them prepared for when we get things going at the beginning of 2024. But what I'd like to do for this last show, I'd like to focus on something that I think could be very helpful, a useful tool, not something I have spent a lot of time on, and it's really more about how to be aggressive with your entry. So let's go ahead and get to this agenda. So I'm going to talk about when to be aggressive, when I think it is appropriate to be aggressive, and how we want to take advantage of situations that are really, really in our favor. And the first thing we want to do, and what I want to explain, is make sure you understand what the tradable trend is. This is very important. Once you understand what the tradable trend is, it'll open up a lot of opportunities for you. The second thing you're going to do with that is understand multiple time frames, because in one time frame you could be in an uptrend, in another time frame you could be in a downtrend but not having a lot of momentum, and then in a third time frame you could be flipping things around back to the upside while the higher time frame is still down. So once you start to understand how these work together, this can be really helpful in terms of helping your timing. So once we go through all that, I'm going to go through the stock requests that came through this week. Let's go ahead and get into this lesson now. Okay, so I'm looking at Moody's Corp, MCO. I've got the monthly bottom left, weekly bottom right, daily in the upper right, and the hourly in the upper left. So well, first we want to make sure you have an understanding of what I would consider to be the tradable trend. And so what we're going to do here is we're going to focus in on the monthly chart. And this 18-month, now this happens in all time frames, but this 18-month line is essentially determining the tradable trend. All right. If we have signs of a pullback towards a rising moving average, okay, then we have a potential opportunity. Now, I do like it when the 40 is also rising underneath, but it doesn't have to be that way, especially after you've gone through a corrective pattern. So, but anytime you get these counter trend pullbacks towards a rising 18-month line, and you have some supporting evidence from momentum, then we have a tradable trend. We have something we can trade. And what you want to do is, depending on how good it looks, and if we can line up a couple things in multiple time frames, then we have an opportunity to literally buy right off of this bottom. Literally looking at this at 300 and saying, pretty close to 300, we can get in and long on this pullback. Now realize this pullback started here. Let's zero in on this. Started about 361. It pulled back for 3 months straight, and we got we found support, or it's the 18-month line. It met up with the 18-month line. If you notice, the 40-month is still rising, but it is above instead of below. But the fact that it's still rising, I think, is a good sign. But more important to me is that we're coming back to this key line. It has acted as support, and it will continue to act as support over time. Now, we don't just buy the moment it touches that line. Now, one other thing that I want to mention here is that when we get this kind of pullback, especially in one where it's not necessarily like this is clearly rising back here it's turning. So we need to reference our momentum indicators and make sure that we're not buying into something that is just going to keep dropping, right? I mean, it might look like it's going to hold and then it just starts to drop. First of all, notice how the MACD is forming a pinch. We have lower highs in place and we're holding the signal line, and the MACD is pinching in towards the signal line. That's one thing. Second, notice how green is staying above red during this decline as well. So those are two things we do want to keep an eye on when we're looking at this type of pattern where we're playing. This is the tradable trend, is this monthly 18. All right, we're trying to take advantage of a pullback to this line, but we want to have the supporting evidence behind it. All right, so we have that. again on this pullback. Now, if we go to the weekly chart, we have a decline phase, an A, B, C decline, right? Now, if we look at the moving averages and we only look at the moving averages, it doesn't look all that good, does it? I mean, there's not anything really standing out here. They're not coming together. We don't have any kind of an opposing trend pattern or anything like that. But if we look at price and we realize we've got an ABC decline, and notice what MACD is doing. MACD is coming down to the zero line, and the signal line is well above zero. You see how it doesn't look like an overrun pattern? We're getting a little bit of separation here, and this is down and this is well above. All right, that's one thing that is a pretty strong signal. And when I get a zero line reversal and we have low ADX like this was at this point, we can draw a trend line on price. But we can keep going down to smaller time frames to look for better entry at times. And in this situation, because we were coming down to such big support on the monthly chart, and we had supporting evidence from the MACD and the DI line, and we have this decline phase. And the key thing about this decline phase on this time frame is we have to make sure the sellers are not strong. And clearly they were not very strong. They couldn't even get the MACD to break the zero line at this point. And we were dropping back to this big round number in this congestion area that the stock spent a lot of time during 22 and 23. So we had that in our favor. Now, when I have this setup where I'm coming into support on the high time frame, all right, this is our trend support, all right, this is the tradable trend, but we're going to play it in a way that's going to be incredibly aggressive, because normally what I would do is just use these two time frames together. But what I want to do is take advantage of the fact that we're coming into this low and we have this ABC decline with no strength to the downside. When we have that, I can go up another time frame and I can see that we make this move to the downside, and look at what happens. We get a divergence in MACD. So MACD confirmed this low, and then we made a new low here. It confirmed this low. All right. And then we get another rally up and we make a new low here, and this is stopping. It's not confirming anymore. And then it makes another rally up and makes another minor new low, and it doesn't confirm again. So now we're starting to see something's going on. And I do want to zero in on this a second, because look at what happened. On this last drop, the ADX did not get above 25. It did here, and it even did here. But then on this last low, we didn't have that. And we're showing divergence in MACD. And we have divergence now, meaningful divergence in the ADX as well. The other thing I'll mention is notice the climax in the volume here, and then we get a move back up and we go to another new low, and there's no volume selling there, right, on this second drop. So we know we're probably getting late. We get a kind of an undercut and a quick reversal. Now, you can play this aggressively off of this time frame if you want, and you could just buy as this is coming up. It didn't if this bar would have closed above the 18, I would say I'm good with playing that. Partially because we went into the zone and we went to a minor new low but had no follow through. So we can be aggressive here with the divergence that's taking place in both of these. But the last thing you could do is go down to your hourly chart. Knowing that we've got divergence in place, I can be pretty aggressive and draw my downtrend in place, and then look to either play a pinch here or a pinch here. And we're talking about somewhere in the area between 300 and 310. Call it 305 to 310. Now remember, this made a low. Look at where this low is, and look at where 305 to 310 is on this time frame. Right? So it's an aggressive entry. Not something that I would do all the time, but if I have all of these time frames lining up, and we do need to have divergence on the lower time frame. All right. This is just showing momentum is slowing, right, with the zero line reversal. And so I would need to take this trend line break if I don't have divergence on this time frame. But if I do, and I know I'm at the zero line here, and I know I've got a pinch play here, and I know I'm sitting on the 18-month here, I've got massive trend support, then I can get more aggressive and play off of this time frame and or this time frame. So keep this in mind when you're trying to, if there's a stock you really want to get in and you want to get down and you like to be an aggressive player, you like to buy on weakness, start to look for this setup. It does take usually at least 3 time frames and sometimes 4. All right, let's go ahead and get into the individual symbols now. If you're enjoying the content, hit that like button and also subscribe. Now, my research can be found at rabelstockresearch.com. But if you have an interest in just learning more about my approach, I would suggest just starting with the book, which I am offering at a discount right now. If you go to rabelstockresearch.com/book, you can find out more information on that. Okay, just to follow up on the lesson before I get into the stocks, I want to make sure you realize that I said the 18-month was the tradable trend, and it was for MCO, but it really, the 18 in any time frame is the tradable trend. So we can go back and look at the QQQ, and you can see a tradable trend here, clearly with support from the 40. And then just recently on the QQQ on the daily chart, we had a pullback to a rising. So this line, the slope of this line is the key in determining. Now, one of the things we want to do is make sure there's respect for the line. But I just wanted to make sure I was clear on that, because if you're a shorter term trader, you don't necessarily have to use an 18-month line. It did just make for a great example of how to use multiple time frames. All right, let's look at this QQQ now. And as I mentioned, we just bounced off the 18-day line, and we've got really good momentum characteristics on this daily chart. I think to turn this around, frankly, we made a peak in the red DI down here at the low in the market back in October. And the red DI made one rally here during this decline, and then we made a new high, and this has dropped back down. So I think if this is going to turn, if we're going to turn, the market's going to make some kind of an interim peak. We want to watch for this red DI to make a move back above here. And then we get some sign that the sellers are finally stepping in a little bit. But the one thing I think is important right now is on the QQQ is this black line, which is the relative strength versus the S&P. All right, this is a ratio. And what we're saying here is that as long as this line is rising, then the QQQ is outperforming the S&P. All right, we want to watch this as we flip over into the new calendar year. As I go through and what I'm going to talk about today, I think will bring light as to why this becomes really important. We could see some shifts take place in 2024 in terms of leadership and in terms of sector leadership. And that could have an impact on this relative strength line. We want to be aware of that, because if this starts to break down, then some of these big cap tech stocks, which have been leaders, are probably not, that doesn't necessarily mean they're going to get hit and go down, but they might not be the leadership type players that they were in 2023. All right, now let me go and look at the IWM. Now what I want to do is, I've talked about the Qs, I'm going to talk about IWM, I'm going to go through a few symbol requests that came through. There weren't that many that came through this week. And then I'm going to go through each and every one of the sector charts and give you my feel for what I'm thinking about coming into 2024, what I'm sort of expecting for them as we move into the new year. All right, now look at what's going on the IWM. I mean, we've been talking about this week in and week out, and this is the reason why you do consistent review. You want to go through it and look at what's taking place here, finally getting some action. Now, since this bar here, the relative strength has started to tick to the upside, but now we're getting just a monster week based on the Fed action and comments yesterday, and we're all the way back up to this prior peak. In fact, the multiple peaks that we've made essentially over the last 12 months, a little bit over 12 months. But look at how the relative strength is starting to tick up through its moving average. So I think this is a really good sign for this. Now, it's a little premature just because we're running up against these prior peaks. So it's not like I'm looking at this as a potential buying opportunity. What I'm looking at it is, if this can continue to improve, if we can see improvement in trend and improvement in relative strength and improvement in momentum, and let's just look at the momentum here. Look at what green DI is doing. Go back and see how long it's been. It's been the first quarter of 2021 since the green DI has been this high, and just blew out the red DI from that last pullback. Now, if we're going to see all of these things happening, right? Improvement in trend, getting through 200, improvement in the relative strength, improvement in the momentum. If we're going to get through all that and continue, what that does for us is gives us a much better environment overall in the market. And I think that's what we're looking for as we move into 2024. we want to be careful, because if this doesn't turn up and if this starts to fail on a relative basis, then this up move that we've been going through over the last few months could be short-lived as we move into 2024. So we have to stay on guard. But right now, just the action here, I think, is definitely giving this move a little bit more credibility, in my opinion. All right, let's look at Twilio. It did get back above the 18-month line, but it really isn't in position on a monthly chart yet. Now, on a weekly chart, it's starting to show pretty good signs. But I think what I would do here is let this push up a little bit more and then look to play the first pullback. It could come in the form of a pinch, just a 2-bar pullback. Or it could form a higher low where green holds above the 25 line. And if we get that, then I think, it's definitely playable. I'd probably play it off the weekly using the daily. I don't think it's really ready for some kind of a huge move, although up to 100 is a pretty good move from here. And that's probably the kind of target I would be looking for on this. If we look at CrowdStrike, this came out of this consolidation area with really good momentum characteristics. The ADX on the weekly is up at 54 now. And look at the turn in the MACD line at the 0 line on the monthly chart. We're getting a pretty big move. Now, we need a pullback in this. I mean, there's nothing wrong with this stock. It's really more about entry here. If you're in it, I would hold it, trail a stop or something like that. But I would be looking for a pullback, and probably in the form of an ABC correction or a consolidation on the daily chart as my next entry point. Now, Boeing, look at what Boeing's doing on the monthly. This was below the declining 18-month, tried to get above, and then couldn't hold it here in early 2022. Got back below, climbed above, and then almost got a little too far away, and then came back and found this support at this 18-month line with the pinch, with green DI holding. Very similar to the MCO that we were talking about. We're finding support at this sort of tradable trending area, right? And now we've got pretty good action here crossing back above the moving averages. What we need is a pullback to the 18 on this time frame, some kind of a check back or something like that. But this is in a really strong position. Momentum is starting to kick in, and look at the volume pattern. You see the new volume that's come into this on this move to the upside? I mean, that is legitimate volume, and it's sneaky because it's not like one big, huge bar. It's daily drumbeat volume. That's a really good sign. We need a pullback. We need some kind of a consolidation. Probably won't happen until we get into the new year, but that's what I would be watching for there. Okay, so I'm going to start with the XLB, and I'm going to work my way through each of the different sectors, and let's see what is what, all right? So I really like what's going on here. Look at this 0 line reversal developing on the monthly chart. You see how we've been kind of just working sideways in the form of higher lows in MACD and more like double bottoms here and higher lows in price. But more important to me is just the way it's skating along and holding the 0 line. This is the setup we want to be on the lookout for. It looks like a sideways basing pattern. There's definitely some pretty good areas taking shape in the materials area. Not the least of which is some of the stocks in the gold area, but some other metals, and just kind of want to keep an eye on this sector, because this sector is really set up to play pretty well as we move into the new year. All right, let's look at XLC. Now, this is one that really had a great year in 2023. It's been a leader. Now, we're making a new high here without confirmation right now. Now, it's premature. It's not divergence yet, because we kind of want to look at this and see if what we need is a reversal here. If we were to reverse here and come back down through the 18, then I would say, okay, we have divergence. So, because we are at a new high here, and this is not confirming at this point. But it could continue to climb, and then we'd see improvement in the DI, and we get a move to the upside and possibly confirmation in the MACD as well. So I don't see anything glaring right now, but what I would tell you is that we want to watch the relative strength line here very, very closely. It's all the way back to its moving average. It's been a great leader this year, but it's starting to die off a little bit. And this is divergence as well. Notice how the relative strength is not keeping up with price. So what this is telling me is that right now, this is being pulled up by the market. That's the only reason why this is going up, because this is actually dropping. It's showing that it's underperforming. So we want to watch that as we flip over into the new year. Okay, so this has been kind of a tough one just because it had a pretty good look to it here. And then when it made a move up and tested these highs, look at how there was a non-existent momentum signal. I want to show this for the XLE. So we had this nice kind of pattern developing and had a pretty good signal to the upside, a lot of good stocks moving up. And then when it made the move to the upside, we did not get the kind of confirmation we wanted to see in most stocks in the sector. And so, it makes me feel like you got to be a little bit more careful when this is taking place. Now, the pullback and really what's hurt this more than anything is the break of the oil chart. When oil broke 80, these stocks have really been hit and really been underperforming. I think it's just going to take more time. If we look at the bigger picture, I don't see anything really changing in the long-term trend. What it's telling me is that it's just going to take longer for them to get up and going again. All right. I don't see a significant amount of downside. I just don't know that they're ready to get up and going all that quickly. All right. Now here's where we start to look at where some things could really be interesting. I've already mentioned the XLB. I think that's one we want to be watching really closely. But this one is almost looking like one of my favorite sectors as we flip over into 2024. Now, it's overbought right now, but the overbought is actually a good sign. And why is that? Because in this move to the upside, we've created very, very strong DI. Go back and look. It's been a long, long time since we've had this strong of a positive DI on the weekly chart. But the other thing that's really attractive about this is, again, my little zero line reversal pattern on the monthly chart. All right. We've got reverse divergence that's developed in MACD, but it's happening right at the zero line. This is right out of my course pattern that I talk about and give a lot of detail on. And so if we look at the way this is played out, we had a big move to the upside with pretty good momentum. And then we've gone through this long sideways phase corrective pattern for a few years. And now we've gotten the MACD back down to the zero line. And now look how it's crossing back above the signal. All right. Look at the new momentum showing up. Remember, momentum starts on the smaller time frames, and then it starts to work into the bigger time frames. It'll go from here to here to here. And that's why the green DI is starting to kick in. Even though the ADX hasn't climbed yet, we're getting confirmation that we've got new momentum showing up. And in fact, it'll start here. It started back here, and then it's going to spill over to here. Then it's going to go here. Then it's going to show up on the monthly. All right. So that's the play. That's the way you want to look at this. What we're going to look for is some kind of a pullback in the new year. And there are a lot of attractive patterns. If you go and look at something like Goldman Sachs, I mean, you'll see the strong move that's taken place. We do need a pullback. In fact, the MCO that I use the lesson is another financial that's showing a lot of improvement as well. Okay, let's look at the XLI. This is another one showing a lot of strength and actually breaking to a new high. We're getting some improvement on a relative basis here, so somewhat encouraging from that standpoint. Another one I'd be watching for on a pullback. The XLK is another area that I think looks pretty good, but we got to watch the relative strength. This is another area. If we start to see stocks like the basic materials and the financials and the industrials improve, we could see deterioration on a relative basis to these, and these might not perform quite as well as they have. So we got to keep an eye on that. Now the XLP is showing some signs of life, but there are no signs of improvement on a relative basis. This is still hanging near its lows. Not really all that attractive, and I think there's a lot of overhead resistance, although I do think this XLP could probably get up to 75. Now, look at what's going on in the real estate. Look at this break of the downtrend line. Look at the strength showing up. Now, this had a lot more damage. You see the overrun of zero on the monthly. So it's not that same pattern we were talking about in XLF. And I do think there'll be some resistance as it turns up. But I got to tell you, I mean, there's a lot of improvement here. It's something to be on the look for. I'd probably go and look at the strongest stocks in this sector because I do think there's going to be some interesting patterns. I got to tell you, I think the XLU is making a pretty important low. This is a huge move off the bottom. We're starting to see the relative strength start to tick up a little bit. There is some resistance overhead, but another area that I think I'd be going and watching and looking for the strongest stocks and see what's playing out. Now, one of the things I see in my bottom-up reviews is a lot of improvement in the XLV. Just across the board, seeing a lot of improvement. And we've got this sort of zero line reversal potential with a reverse divergence. Definitely something to be on the lookout for. Go through and start watching your healthcare stocks, because I do think there's some pretty good signs of improvement. The overall pattern here is definitely on the alert for 2024. And then finally, let's take a quick peek at this XLY, which found support at the 18-month, has turned up nicely. We had a zero line reversal there with a pinch play here. We're going to be on the lookout for a pullback here, but we do want to make sure that the relative strength continues to hold its ground during that pullback, because this is not showing the same kind of strength as some of the other areas. So kind of keep an eye on that, but there should be some pretty nice patterns inside there. Thanks for watching the show, and I appreciate all the support this year. If you have any stock requests, you can send them to stocktalk at stockcharts.com. Now, I won't be doing a show until next year, but you're welcome to send them in. And starting next year, we'll kick it off with hopefully a lot of requests that have come in. If you have any interest, you can check out my YouTube channel at Invest Like a Pro. I hope everyone has a safe holiday season, and we'll see you in the new year.